What's up? What's up? Good morning. This is Hype and Chat Champs. Ooh. What's up, you guys? Woo! Woo! All right. Gonna late start today, but let's get ready to get going. Dude, what a crazy day. CPI this morning. We're moving back above 6068, the key pivot in the S&P today. Yesterday was pretty brutal. Not gonna lie, that's my first big losing day in a while. Big. Market's moving now. Get this market open. Nothing. Market just was basically nice bull setup that just started selling when Nvidia started collapsing. Yeah, I roughly took like 1 to 2K loss in each one of my accounts. So it's probably close to 20K. Pretty big. Well, I mean, it wasn't because I lost a lot, just because that's just the nature of the game. I mean, I was having 10, 20K winning days for day after day after day after day. So just nature of it. That's pretty big. It happens. Going out the door. See what our resilience numbers are. Positive. Good deal. Okay, good. Let's get our liquidity maps going. What's up? Good morning, guys. Don't forget to smash that like button. Don't forget Zoom call. Head on over to the YouTube. You know the role. Keep it going over there. I didn't trade anymore after the stream, so we have more house stuff we're doing. Buying the last couple things, paint, rugs, and that's it. Gonna be moving on Friday. Building this huge studio, turning it into like a streamer house. The whole top floor is gonna be a production studio for two streamers. It's gonna be awesome. All right, BLD. Let's take a look at it. BLU. All right, good. Open, blue, open. You guys know the rule. What I like. Open, blue, open. Hold for here for DD band. I don't know how close we are from that, but let's take a look. The DD table, they're working on changing the parse. The CME group changed their website on us, so our scraper needs to be updated. That's what we're working on that right now. Let me get Thinkorswim for the numbers though. Roughly 60.92 on futures. Yeah, so it's just kind of brutal. Like I didn't add it up, but it was probably close to 20K loss. But again, that's like 2K per 10 accounts. Wasn't like it was a massive in one account. So that's just how it is in the funded world where you have the multiple accounts you're trading. Okay, so basically here, open blue, open the DD band. Not a terrible setup on that. Let's look at QQQs. As soon as I got out the stream, I was like, no more of that. Okay. Same thing, BLU, open blue, open on NASDAQ, which is great. Resilience is positive, so we might not make it all the way down here. And of course, any support at the open is a go. So do I want to jump in on this? Almost was like, NASDAQ is at DD band right now, so NASDAQ is already like a out of bounds trade. Let's see if I want to do something on the S&P. That's moving quick. All right, 60.92. It's about. They're supporting the open. Okay, let's take a look. Now let's take it. I think I'm going to take the S&P up to DD band. Looks like a good setup. I like it. Everything looks wonderful today. What's up? What's up? What's up? Oh, wait. Zoom, you guys can't see on the stream? What the heck? Oh, my bad. My bad. My bad. My bad. My bad, you guys. My bad. There we go. One second. I'm like fiddling with my... So odd. Okay. So running a DD band today. It's a pretty solid trade. Anytime you support the open, I always like to take a good trade off of that. Right here, I'm gonna let it bounce and then take another one. Where is my? So basically here, small position here to DD band. I'm gonna 605 and some change. I'll long here, long again. So I've got two longs in here. Open blue, open on that. Open support, open positive res is good. I will stop right here. Take the trade if I get back in. On that side. Looking pretty solid, but I'm gonna wait on this one. Yeah, well, for the most part, it feels really chasey, but it feels good. Like, I usually don't care about anything until the open. That's the one thing you have to remember. The market opens for liquidity, right? Here's a trick. When you're trading, forget about the open. I don't even, like, once CPIs happen and moved here, this is the new liquid spot, and I'm just looking at the liquidity map that is. So I never look at the historic, right, as anything. So greater market, it may be, like I'm saying, maybe, right? So let's look at everything. The resiliences are positive. That's good. So we have support here. Nasdaq's a DD band, which is good. For the most part, 88% of days close inside of the bands, and Nasdaq is broken through and pulled back. But be okay on that. Oh, what the heck? Hold on, guys. Database just crashed. Hold on. I gotta log back in. What? Heck. Give me a second, guys. Well, that was interesting. Good old Tradabate. All right, can you guys see? That was odd. So I had to log back in, so. It's pretty solid here. I don't hate it. Long train setup to DD band as long as the sounds is nice and good. What is going on? What's up, guys? Good morning. The news is bullish in theory. Doesn't hedge for the potential to move up on the news. Just haven't updated yet. So, right, the news is good and bullish. The market moved higher on that. Yesterday was really weird. Yesterday, everything was bullish in the market. Except Nvidia just rallied and then sold off on that China news. And it was just enough to drag everything down, right? So today it looks like the market's back on track to what it was trying to do. And Nvidia was trying to sell a little bit at the open. But let's see what happens. If we break 137 on Nvid, that's good. But all the stocks are doing great today, guys. Like, super great. Don't forget, YouTube. Don't forget to smash the like button, you guys. With some love in chat here. All right, take a look at some of the liquidity maths today because things are looking super solid. Am I posting in the Discord or can I? Just add 40 points for S&P. Just there's a tool somebody made that, like, you guys can work amongst yourselves if you guys want to do the calculations manually. Just ask people in chat. Y'all are welcome to take over one of the channels that are there. There's a bunch of member posted tools and stuff. You guys can get stuff from there. But I'm not going to do any extra posting or extra work or anything for it. If y'all need it, it's 40 points S&P. I think it's one. Let me see what it is for NASDAQ. And just add it. You know, draw it yourself. 152.5 NASDAQ. There you go. And then just add that to yesterday's close and then draw your lines. We should have it fixed this week by before next week. We should have it fixed. So what happens, we scrape the website, the CME website for the data to do the calculation. And every time they update the website, it just breaks the bot. That's the sucky part about bots. Sitting right at the open. Watching the conditions. Everything looks good. All right. Greater market today. Let's check it. What's up? What's up, chat? Just, like I said, we're going to look at this subjectively. Here's the open. We've moved on CPI, and they're starting to pick up a little bit of speed. That's good. We're going straight to DD band. That's what I want to see. All right, greater market, you guys. You guys know the drill. Greater market. Ready? Let's do it. Chat. Bullish or bearish? I know you're hanging out. Type it. What are the 3 things that we look at for greater market every day? I want everyone in chat type it. Let's play a game. I'll look it on GME. All right, we'll take a look at that in just a second. DD. Number 1. DD greater than half. Check. What's number 2? Remember, yesterday was greater market bullish. We just got squeezed. SPY greater than MHP. That's right. SPY monthly gamma positive. Check. Boom. Monthly maps. Let's take a look. We had some bearish setup for a couple of days of bullish overall. Take a look. Let's see if we get on the S&P here. So yeah, yesterday was pretty brutal. I think my total loss was close to 20K across all my accounts, but I've been having multiple 10 and 20K days over the last 2 weeks. So it was giving back a significant amount, but when you're playing the, multiple account game, isn't about 1 to 2K per like 10 plus accounts. It adds up. But that's pretty normal. So right now I'm up equivalently close to that. Probably up like 6 or 7K already. All right, monthly maps on SPY. Let's go. Yeah, yesterday was probably the biggest loss day I've had in a very long time, actually. But it was just such a weird day. Like, it just really squeezed me super hard. All right, bull side strong, bear side weak, no liquidity. Oh my God, up, up, up. Things are good. All right, can't complain. You guys nailed it. Y'all are so smart. Y'all nailed that shit. What's your position size for smaller Apex or 100K static? For the static, once you go funded, your first trade should be roughly 3 to 5 micros per 100K. It's about, or that's how I do it. So that I don't hit that, drawdown of like 600 something bucks. There we go. Let's get it. This is better than yesterday. Let's fucking ride. Let's go. Champs. Trust the process is all I got to do. And trust in the process here. Can't complain. So far we're doing good. Yesterday, all of these were like minus 2,000, so it was pretty nasty. All right, GME, y'all want to see it? Let's check it out. GameStop, baby. GameStop had that squeeze. I said it. I said it. Monthly maps did not lie. Monthly maps did not lie. Told people. Monthly maps. Take a look. Looking pretty solid here. It's still building that way. Now again, this is kind of the interesting part. Bull zone, bull zone, bull zone. 3 weeks, which is good. GME, bear, squeeze, which is great. Look. I'm telling you. Not that I'm... Look. Data's data. Do I prefer static? Static are the easiest ones to like turn and burn. I like them. Statics are good. But they're harder in a way because you have to basically grow a static account slower. And your first trade is like your best trade. So you have to be really careful in your planning when you're doing static. Do very careful in your planning. You guys think we get a DD band tap today? What do y'all think? You may still set up for it. I don't hate it. I told people I'd update it. This is the better way to say it. Shorts are fleeing. Let's go. Let's go hit up the Twitter. All right. What do you guys think? S&P to DD band. We got about a 10-point move from here. What do y'all think? If you believe anything is possible, if you believe, you must believe. I'll get off the monthly map here. Nasdaq just shooting. God, Nasdaq way out of bounds. Nasdaq breaking like all-time highs here right out the door. That is something else. That's what I'm telling you, man. Yesterday's Nvidia was just a fucking fluke, man. Yesterday's loss hurt, but whatever. I'm gonna catch it all back and then some today if we keep going. SPY to DD band's gonna be a ridiculous move. We get it. From here, it's just a little bit higher. About 10 more points. The greater market's good. All things are good. We're going to keep an eye on this guy right here. If that number goes negative, I'm going to cut my position early. When res is greater than 0, this is right here. So indicators, res, greater than 0. We have what's called mode 2 resilience, which means if this is support, if you support the open with volume, this is trade 1A on the BLU right there. It goes to the D band, which is roughly like 10 more points from here. Let me get you the number. Fuck yesterday. 93 out 10 points from here. So roughly 607.5. Give or take an estimate, 607.5. If you lose the open blue open is a trade 1B. I always take that as well. The stop down here. If res is less than 0, we got to be careful. So caution is if res is less than 0, fill the gap that way. Be careful. So all eyes on res today. We're good. You believe in Matt's gut? Matt's gut's been pretty good lately. Although yesterday's awesome bull market got shit on by Nvidia and its silliness, right? Everything was going to move, and then we were doing that like CPI pre-selling, right? But But then Nvidia just collapsed, which slowly brought the market. The market didn't collapse yesterday. It just slowly got dragged down and just pulled through resistances. Like I'm saying, yesterday was probably the biggest loss they have had in a month, maybe longer. It was pretty gnarly. But I mean, you know, it's trading. You can't really complain about that. That kind of shit happens. Walk right up to DD, baby. I'll close it out. Fingers crossed. What do you guys think? YouTube, let's go. Click that like button. Thumbs up, bottom of the stream, let's go. Friday we do, we're going to be doing a giveaway, Elite Trader Funding. If you guys like Trader Funding programs, I give away 3 accounts every Friday. You guys want 3 ETF accounts? It's going to be like a couple $100 in value of each one of those giveaways. Plus, if you guys use them, use our code, use our link, or use our link, the bot's posting it. For every $250 you spend there, we're going to enter your name into a drawing for like bigger prizes, like lifetime memberships and stuff here. I'm moving on Friday, but here's what I'm going to do. I am moving on Friday. I'm going to wake up, stream while the movers are here, moving all the big stuff. And right after my stream is over, I'm going to disassemble my office and make that be the last thing they move. Because I want my office to be like my office stuff to not get damaged. I'm going to be like, put that on the back of the truck and secure it. Don't sandwich it between like couches and other things. You know, this is like my expensive stuff here. So I'm literally going to get up and stream while the movers are here. And as soon as they're done, I got to disassemble this. This office is ridiculous. How much stuff I've got. It's crazy. I have to take down all the padding, the soundproofing stuff, all the lights. I've got all these like lighting things up here. It's a full production studio here. I could have an OnlyFans channel if I wanted to. I should do that. We do a first drawing on December 24th. On December 20th, okay. On December 20th, if you guys subscribe to us on the monthly package, anybody that's a monthly subscriber, on December 20th for Christmas, we're going to do a drawing for 2 lifetime memberships. So that is 50% off for the first month. You're just going to enter it one time and be subscribed at the time. Yes, sir. Not the ETF drawing. That's going to be next year. We need to have like enough people entering that thing. So as soon as we get 20 people in the ETF, this is how I'm going to do it. Like the balance of 250 spent with them. Each time you spend 250, your name goes in a hat. So if you spend 1,000, it's in there 4 times, and it stays there, and we just keep drawing from the same pool. Eventually, you'll win something. And we're gonna give away like fun shit, like graphics cards, maybe monitors, maybe tablets. You know, like fun things. Because essentially, I get like a cut of the sales from them, but the cut of the sales I get, I'm gonna just turn into prizes. I don't need that money. I'm gonna give that back to you guys. So if y'all are playing the trader funding game, I'll just give you guys back the money we make. That was my goal with that. So after we get like 20 people that qualify for that, then we'll start doing drawings. So like sometime next year it should get there. Trying to pull back, but market just shifted to the new hour candle. We have a little bit of a pullback, but let's see if we get one more little bump. Nasdaq is testing highs. Looking for S&P DD band 60, 90, 6092.8. One little bump. I'm keeping an eye on resilience just to see how we're doing here. Probably like basically this. I'm going to drop the scale. The market makers have the power, liquidity to move price. So the market makers don't move. There's no such thing as, think about it like this. There's no such thing as price. I'll explain something in the easiest way to understand. So the market makers just put bid and ask. They just quote one side or the other. And you as a trader can decide to buy from them or to buy from each other. When you do a market order, you just fill to the next order line in which somebody's willing to sell. So it's not like they're like, this is the price it's trading at. There's no such thing. There's a price at which somebody's buying, the price at which somebody is selling. And they're also contributing to where that is, but so are you and me. So they can't just move price because price isn't really a thing. The price that you're thinking of is the last price on the screen, which is just the last trade that was filled. That's never the price of this. So because there's a bid and ask, there's really no such thing as what is the current price of something. It's like what is the bid and what is the ask. It's a kind of a weird way to think about it. So how market makers, quote unquote, move price is that if there's only a bunch of sellers, right, and they're the only buyer, it's like they can control where they're buying because they're the only people who want to buy. So they'll put the bid wherever they want, and people selling to the market gets filled where they want to be filled at because they're the only buyer. So through that methodology, they can control where they want to buy, and if they're the only buyer, then by default they're controlling the bid price, right? But if you're bidding somewhere higher, and you're next in line, you get filled. So you can control bid the same way by being on level 2. So futures has this other thing that you guys may not know about. It's not really something talked about, but the bid and the ask price in futures are set for the most part by an algorithm. It's not a natural, like in stocks, you have a specialist like quoting both sides. The best bid and ask price is set by a machine, and then everyone lines up behind it, basically. So the Globex has protocol on it where there's essentially like constant measure of liquidity, and that's basically quoted the best bid, the best ask, like basically like the pace car in like a NASCAR race. Like you can't bid ahead, you can't sell ahead of that. So the Globex has some really cool programs on it to set price, like gapping prices and things like that. And everyone else that's quoting futures on the futures market has to line up behind where that quotes. So in a way, again, it's not published anywhere. This is just the speculation I have from people I talk to and the papers I've read about the Globex is that it's constantly basically like where people are submitting orders. Kind of like the IOP that calculates the gap. You guys know I always talk about that one. They're always calculating like, okay, market maker, you can't bid or you can't quote beyond this or sooner than this. So it like gives them a range at which they can participate in. Do we get a DD band today? Do I make my 20K back? Let's see. Hopefully that answers the question, right? So market makers just can control where they buy or sell. And if everyone in the market is only buying or only selling, then they're the only traders on the other side of that. And we're the only other traders on the other side of that they can control that. And an example I always tell people is like you buy what's something that was like Beanie Babies. You guys remember those back in the 2000s? You bought all of them. Now you own the whole supply. And now you're the only seller. So basically, you being the only seller, you can set the price of anybody that has demand for that thing because you have the whole supply. So in that particular example, that illiquidity, right, that one-sided market, you quote unquote set the sell price because you're the only seller. I'll be right back. But you don't control the buy price, the buyer does. They control where they want to buy at. Right? So that's where they negotiate and say, well, I don't like your sell price. I'm going to buy for less. And then that's where the bid and ask comes in. Does that make sense, you guys? Res is barely positive. That's more than enough. Someone just asked me in chat, what's the reason that QQQ hedge pressure has just been so far away? That's just the nature of QQQ. It is squeezing that hard. It's that much of a short squeeze in QQQ that it is just so positive it's feeling. Remember I told you guys that the fuel of this market was going to be a short squeeze. You guys remember that? You guys remember that, right? Talked about that. Speaking of that, showing us some magic. Even at these highs, the market has flipped back to being liquid. The commitment of traders no longer shows an irrational short squeeze. It's back to being a liquid, healthy bull market. Which short squeezes, you always have that fear of it leading to like a an exhaustion point, right? So you guys know the rule here, right? Now again, I'm going to show you the top part of this graph. So as the S&P goes up, we analyze the positions. And let me just kind of zoom out on this so I can see a little bit better. You know, see this? I wish it would like... I love using the bar. Oh, I can turn this off. Let me delete the one. That's this one's stupid. All right. Can I do this here? Can I move? I can. All right. Excellent. All right. Thank you, bar chart. Okay, let's go. Ready? Let me teach you guys something. This line is your institutional longs, okay? It's like your 401k, etc., mutual funds, ETFs, all that stuff. This blue line are speculative hedge funds. Hedge funds. Well, actually, it's written down here. How's my trade doing? Pretty good. I'm watching another screen. The red line is market makers. Let me show you something interesting about this market. The distance at which these things, or sorry, the trending of this, an example, the long side of the market is becoming more long. You see, it's like the total number of positions reported to the CFTC by like active traders, right? If this green line is going up, then bulls are becoming more bullish, right? They're longing harder, and you got a nice little rally to go with it. Typically, a healthy rally has the longs going longer and the hedge funds going shorter. They like fan out like that, right? Okay. when they're selling, the green line and blue line, or the blue line goes down and the green line goes down. It's just pretty easy to see that when the hedge fund, everybody's selling, everybody's buying. Whereas everybody's selling, you have a little bit of a pullback, right? Here, everyone's selling a little bit. You get a little bit of a pullback. Pretty easy to see that. All right. When everyone's buying, which is basically here, you guys see how they're both kind of pointing up? It's an irrational short squeeze that usually has an exhaustion point. There's a little bit of curvature in that because it speeds up. And typically short squeezes do that, and then they kind of like crash pretty hard, consolidate before they keep going. So we were worried about that. However, as of a month ago, you're back to bulls longing harder, bears shorting, and the dealers are having to pick up the rest of it. This pattern where they fan apart from each other is a liquid, stable rally. Like I speculated last year, this is the start of the rally. The S&P will be at 7,000 by the beginning of February. We're going to gain 10% in 3 months. It's no longer a short squeeze. It is a stable from here. It is now stable and it's now moving up. Isn't that crazy? Oh yeah, hell yeah, trade. Let's go. Let's go, baby. I'm up like $25,000. Fuck yeah. Making back what I'm lost last time. I'm trimming down to my final position there. Matt's gut is uncanny. I mean, look. Y'all do the math. How much is that? That's basically undoing the loss from yesterday, which is equivalent. Just all of those were red yesterday. How much is this? 2, 4, 6, 8, 10, 11, 12, 13, 14, 15, 16. And let's add up the small ones. 17, 18, 19. Yeah, that's 20K. That's cool. If I would have never fucking got out of bed yesterday, then I would have broken even. I wouldn't have broken even. How'd I manage so many accounts together? On another screen. I'm just gonna hold this runner to go all the way up to DD ban. Thinkorswim just crashed. What if we retrace everything today? I don't trade like that. What if a meteor falls out of the sky and hits me in the fucking head while I'm trading? Dude, I love this stuff. Look, mahogany teakwood spray. It kind of like, I bought this from Bath and Body Works. I always get the names of these shops confused. Bath and Body Works. Mahogany teakwood, right? All right, let me tell you something about it. For the longest time, I smelled it at the store. I was like, oh my God, it just smells so good. It took me many years. Like, it's just such a manly smell. It's really, really, really strong. It took me many years to realize why I liked it so much. I know anybody here that was like, it's a millennial, right? You guys remember in high school, we had a cologne called Curve. Do you remember Curve? I'm sure you guys remember that. In 1999, every single preppy kid at your school was a fucking Curve bro. Before that, it was Cool Water. We all were Cool Water or Tommy Hilfiger, but then Curve came in, right? Let me tell you what Curve is. Curve is mahogany teakwood. I'm not gonna lie. This spray, I was like, I like it so much. What is it? It's Curve. It literally is Curve, dude. Go to White Barn or wherever and go smell the mahogany teakwood candles. You're like, that's Curve, man. That's it. And I was like, that's why I like it so much. It took me forever to realize it was such a nostalgic scent. It's literally curved, man. And I was like, that's awesome. Because I was a curve bro in high school. That was like the cologne in 1999. Steve still wears curve and cool water. That's right. That's the good stuff. Cool water was like my junior high cologne. When I first got into cologne, it was cool water. And then when I got into high school, I was like, I evolved my palette and jumped into I had Curve and Tommy. And everyone wore Tommy like in 1996. That was like the thing. Everyone had Timberland boots. Everyone wore polo shirts. All the girls had that purse with the duck on it, Dooney purse, and everyone, girls and guys, wore Tommy. That's high school. And Curve was if you were like a little cooler, a little edgier. Taking you guys back. Everyone's like, oh shit, I still have my Timberlands. Oh, let me double check futures. I don't know if we're at the DD band right now, but I always close out at DD. Let's go there really quick. Oh, it is there. It's like I'm still a Curve bro. It never left me. It's good. All right, you know what I'm going to do? We're close enough. I'm going to go ahead and take all my profit. I locked in. That's it. Yeah, it's 20K. That's good. Everyone wore Curve in the Jordan's cologne. I never wore Jordan cologne. I didn't know he had one. Blast from the past. Bed Bath & Beyond. Yeah, Bed Bath & Beyond. That's where I got it from. So whatever it was, like I went there and I smelled it. It was like, oh my God, it's like, I love it. I don't know why I love it, but it's so good. Let me buy some of this. So I buy the room spray, right? I just spray my room just to get that kind of smell. And then one day I walked in and I go, that's Curve. I was like, oh my God, that's Curve. That's why I like it so much. So I swear to God, you guys got to go to Bed Bath & Beyond and smell the mahogany teakwood candles. You're gonna immediately jump in a time machine and go all the way back to like 1997. And you're gonna be like, holy crap. I'm still a Curve, bro. Axe all day, every day. There you go. All right, I'm flat on my positions. We're close enough. So as exciting as this sounds, you guys, we had to leave yesterday to go finish up shopping for the house stuff. This is exciting, but don't let me fool you. The loss was as equal as this yesterday. So yesterday I got smacked around for about 20K. So we're back to now I closed a little early, but DD band is the last point. So yesterday's trade was weird, and I didn't have a Zoom call to explain it, but basically I'll walk you guys through what happened. Right, I waited for right here, I think it was like hedge pressure or something. I was trading NASDAQ, that's what it was. But I haven't had like a big losing day in a while, so I was due for one. It was so weird because all the signals were good yesterday. Everything was good. You know, NASDAQ was trying to move, and then obviously there was some pre-CPI selling, but you see NASDAQ is like, all right, we're back to where we wanted to go. This is what it wanted to do yesterday. It just got out of the way for CPI. So the other weird thing is that the catalyst that came from NVIDIA was the thing that dragged everything down. Everything was good. Everything was solid. And then remember, NVIDIA just popped out the door and just weirdly started selling off, right? And NVIDIA is such a high enough market cap that it can cause it to happen. So as everything, I'm sure you guys probably had trouble with yesterday. Yesterday was probably like my worst trading day, like this year. Maybe it just was like not friendly. Just a weird, and again, it's the state of the market. Weird shit just happens. You got to kind of be prepared for it. You know, we had that China news and NVIDIA just popped at the open and just systematically sold. It wasn't even like selling, retracing like normal. It was like the NVIDIA bid was just getting pressured all day and it just went straight down. This, I'm going to tell you guys, is like a 1% sort. I think this is a highly unusual thing. So if you got your ass handed to you yesterday because the market just was super bullish and all of a sudden one stock dragged everything down, welcome to market cap weighted indexes, right? it happens. And when something like Nvidia shits the bed or Apple shits the bed, the index is going to shit the bed too. And it just yanked everything down, even though other stocks are doing good. Like even Apple turned around in the middle of the day, and Nvidia didn't. Like Apple was like, you know what, whatever, let's get back to rallying. Nvidia just pulled back down, and so the index just had no reprieve on that selling. So where I got into my longs was like basically at the right spot. I think a couple of them I got in like slightly early, but for the most part, my entry was good. And then I had to leave, and I didn't even get back in time to do the Zoom call, so I didn't get a chance to share it with you. But you know, in the sake of transparency, I always got to share with you what I did. I didn't get a screenshot of it because the day had already reset, but it was roughly close to about 20K, give or take. Yeah, I got in at the right spot. My trades actually were doing well. You know, on the stream still, my trades are doing okay. I think I actually got in a little early, and I think when I got off the stream, I was down maybe like 1K per account, something like that. And then just for the rest of the day, once I hit like that 2K, give or take, that's like my hard stop-ish sort of the position size I take. I don't lose any more or try to gain any more than like 1 to 2K per account. Move in NVIDIA was particularly usual because NVIDIA broke through like hedge pressures and monthly hedge pressure and bull zone. It just smashed through everything like it wasn't even there. MHP was pretty gold at the end of the day. Yeah, it was at the end of the day. Rev started becoming negative close to bull zone bottom, but the move in the video was not particularly unusual. It was fairly unusual, but it was a news-based event. So it's like we teach you guys, the news-based event is just going to do what it does. You can't really predict people's reaction to some news, especially news that like, you know, has to do with regulation or the ability for a company to do business. You know, wasn't it, you know, we're talking like antitrust sort of things, you know, this could be a big thing. So yeah, it's more that NVIDIA just kind of like walked through pivots like it wasn't even there. And that tends to be the case. And we actually teach you guys about this. If you go to our, let me show you in our class. And by the way, guys, if you haven't taken our classes, you got to take our classes. I'm going to tell you something. If you, we lowered them, or we made them available for $20 for 20 classes. That's it. That's literally it. We have over 6,000 people in our Discord, like paying people. I don't know how many free people, but the fact we made that a thing, so many people signed up for it. So if you go to our Rocketplace site, take the classes. It'll teach you all this stuff. A stock catalyst is already here. We already teach it to you. In the ranking of highest volume to lowest volume in our pivots, an individual stock catalyst, large cap news, can pivot the entire index despite structure. We prepare you even for that. We tell you that's a thing. And as rare as this is, ultra rare that an individual stock catalyst, a big enough one, can bring the whole market down, because these are market cap weighted index, right? So like you're talking, if Nvidia or Microsoft or Apple, Amazon have some really damning news where they just collapse, the entire index can pivot despite structure. Index structure just falls apart. So like leading up into Nvidia earnings or big earnings or whatever, you're going to have that. So all of your things that we teach you, like DD ratio, DD band, MHPs, resilience, hedge pressures, all of that can become victim to a stock catalyst, which ranks above it. It's a higher volume potential than that. So as Rich has said, the top 10 can pull down the other 490. If the 490 you're positive and 10 are negative, absolutely. So you always have to kind of be aware of days where one of your like top 10 stocks has a bad catalyst. It can yank the entire index down for a day. And as you see, the spring was already loaded for this to pop up, as my trade yesterday was along to yesterday's DD band, wherever it may be. And you see that we just had a little bit of pre-selling in the CPI, which is normal. But NVIDIA just, as it was trying to rally, which is what it was wanting to do, NVIDIA just was like, nope, we're going to yank it down. And then CPI happened, and it just went right back up like that news didn't even happen. And then now we completed the move. And trading is like that. It's like, okay, you got to take your lick. All right. I survived. Then I'm up again. Like, the idea is that I can't take one loss and like that to me. I can't, we fuck up sometimes. But in reality, I didn't fuck up. I did what I was supposed to do, and the market just went against me. So I played the positions really well. I stopped with a sizable loss, but it's normal. That's my normal loss. That's equal to my gain today per account. So it's not like anything was out of the ordinary. So you just take your lick, come back the next day. And so somebody this morning said it just feels like this is going to reverse. And that's where I want to kind of coach you guys on. I didn't feel like anything. I don't feel anything. I wake up, I look at the structure that is. We teach you, never look at pre-market, never look at the past, never look at historic data. Wake up and trade what is, like the previous day didn't even happen. Somebody may say, looks like it's going to sell off. And I was like, oh no, I'm longing at the high. I'm chasing the long. Because past has nothing to do with now. When the market opens, it opens at the most liquid spot. Anytime the market opens, never say it's moved too high or too low pre-market. I want you to never think that ever again. You guys got that? Markets will open at the most liquid spot, which means the most buyers and sellers are at. Market makers will use the MOO protocol to take all where people want to buy and sell at the open and fill it at the highest liquid spot. The open price has equal number of buyers and sellers. Does everybody understand that? You move up 1,000 points in CPI. You move down 500 points on earnings. Don't matter. The market will open at a liquid spot. It's like a reset button. Do we got it? Somebody in chat feels like it's going to retrace. Why? Because it moved up too high? This is where you have to understand that the opening protocol has nothing to do with anything but finding liquidity. There are buyers at the high and sellers at the high. It means you open at a liquid spot. So get your liquidity map out and forget about the pre-market. Never pay attention to pre-market or yesterday's close. Or as a matter of fact, anything that happens before 9:29 is completely irrelevant after the market opens. Ragi teaches the same thing. She says 9:30 reset trade. That's why I love her, man. She's a talented lady. I really do dig Ragi. She's a really smart lady. I've talked with her so many times. She's really sharp about futures. That's 100% correct. The market resets at 9:30. And so I open up, I trade what is. But let me do something really quick. That's it. So we do the same analysis every morning. Wake up, check the news. Nothing crazy was happening. Okay. Nothing big and like, the big top 10 stocks. We did the greater market. All three things, 1, 2, 3 are bullish. We looked at DD. We looked at MHP. We looked at monthly maps. All were bullish. Let's check. I'm a bull. I say, where am I in a long today? All right. What are the indicators I have? Resilience is greater than 0. And we gapped up and fell to open. This right here is BLU 1A. I chase that open every single time. Every single time. The small position, knowing that if we do break, I can double down here and go right back to there. Class, if I longed and doubled down here, right? It has to be within my stop distance, which it is. I do a one strike stop on S&P, which would have been about there. My second entry is within my stop, so I chop my position up into smalls. I was going to do 3 here and 3 more here. 2 to 3 is like my small. And then I was going to long here. If I long again on a second trade, what do I do here? At the tail arrow. This is a pop quiz. If I were to long and it were to dip and it was to go right back to open, what do I do? See if you guys learned something from me today. Trim. Close. Said nailed it. I close all of it. The tail of the arrow is a close all. Close everything. If you dip and you DCA lower and it's within your stop and it cools right back to open, the arrow, the point, Close all. That's never a trim, it's a close all. If it goes here, I close all, right? If it falls here and goes there, I close all. And then if it breaks and lands on it again, I open up a new position. Does that make sense? So on a breakout move, I need confirmation. I don't bet that moves break out. Whenever the market dips and comes back, I double down and close out. This is a profitable trade. And then if it keeps going and supports, just like here, I could choose to get back in on another small position and repeat the process if it dips again, et cetera, et cetera, et cetera. I treat each trade separately, right? Okay, good deal. So I wouldn't trim. I would always close. Okay, so that was it. We walked out today. I said, okay, I'm going to long at the open. As we supported at the open, if resilience, this white line is greater than 0, call it mode 2. At the open is support, positive resilience, and this leg of BLU where you open and support at the open, they go hand in hand. This is strong confluence for that trade, which is why CPI does this, and people are like, maybe it's going to fade, and I'm like, no, I'm going. Everything looked great, right? So just keep in mind. And so the other setups today were, and we exited right up close to DD band. If this breaks, I just stay out of the way, let it fall. MHP trading back up to next resistance. It's either there or it's there. If res is greater than 0, we'll go fill the gap this way. If res is less than 0, I exit here. So remember, when I draw the arrows, the arrow is where I get out of the whole trade. Right? So all day long. Res greater than 0. I'll take that trade. I put 3 because it's very confident res is greater than 0, which is my higher side of my small trades. My small-ish trade is like 3. Small is like 1 or 2. But with the confluence with res, I felt pretty good on that one. And you know what's weird? It's because yesterday, right, the market was like selling, and then today it popped. And I bet you, how many people showed up today feeling some sort of way? Let me print that. Let me show the chart. I'm gonna teach you the most important lesson you ever had as far as trading goes, feelings wise. How many people? I'm gonna look at this, right? How many people try to like maybe long this and got burned and then came here and then you saw the market here and you felt a certain way, like, oh man, I'm confused, or yesterday hurt. I don't know if I want to take this, or I don't trust this up move. It's okay if it's you, but tell me, how many people felt a certain way about this? Did you feel something like scared, nervous, timid, shy? You got burned yesterday, so maybe you're avoiding today. Some of you guys in Zoom, yep. Me too. Or you felt like shorting. You felt like, I don't trust it. Let me short it. Like, you just feel a certain way. The point is, you felt anything at all. Because the past has some activity. You woke up today and go, oh crap, I missed out on the long. That's the long I want to take. And then you're like, you know what? Let me maybe short it because of yesterday. Or let me not enter the long because I lost yesterday. So the idea is that the most important thing you have to think about trading is that what happened yesterday and what happens pre-market, you have to forget 100% about. Don't have any feeling. The market will have the structure it has when you open. You open at the most liquid spot and will have structure. When I wake up, I don't feel anything. I took a loss yesterday and I go, that's a loss. Okay, whatever. Market moved up today. I don't go, oh man, I missed out on that. Shoot. Okay, maybe let me fade it, or let me, I don't think anything about it. I just wake up and say, okay, where are we opening? Okay, let's go. We're opening right here. And then I go immediately to my structure and trade. I don't let this make me feel like it's going to short. I don't like this make me feel like it's going to sell off. There's structure. We fell off in futures and hit monthly hedge pressure at the end of the day and supported. That's not bearish. That's exactly bullish. Period. We didn't lose monthly structure in futures. So I don't even feel like the market's reversing, and I don't feel anything at all. I don't try to feel a certain way because I lost a trade or because the market's moved too fast for comfort. Get used to just not feeling that. Get used to just looking at your structure. And that's why people ask, well, where's the historic data? You guys are so used. The reason I designed Rocket Scooter this way is because you're so used to picking up a chart and looking at the historic wiggle wobble of all your indicators. Well, where'd the crossover last time? And where's the VWAP now? And what was last month's? Where's the monthly high and the monthly low? And all this stuff. I specifically designed this so that we don't show you the past because it makes you feel a certain way. As a matter of fact, had you just started trading today, the first day of your life, and you open up right here, without knowing anything else about the market, but you knew everything else about Rocket Scooter, does this look scary at all? Be honest. You look at this, bull long up, greater market, all three things are up, DD ratio greater than half, resilience is up. All your signs are bullish. Forgetting everything in the past. It just looks like free money, doesn't it? Right? So the idea is that the reason we originally designed this to just give you the data that is and not pouring out, okay, where's all, because look, we open up on a 1 minute chart focusing on just one day. When you load up Rocket Scooter for the first time, the default is 1 minute chart and only shows today's data. I don't want people to say, well, what happened yesterday and what happened the day before, because it doesn't matter. Does not matter. So the idea is that if you feel a certain way because of yesterday or because of the pre-market, you're already doing yourself a disservice. The market maker's job is to open the price at the most liquid spot, which is a hard reset button on the market. It opens like yesterday didn't even happen. The imbalance the market maker took is immediately rebalanced in this new redistribution zone. So the neat thing is if you feel a certain way about the market, all you have to do is wake up every day and forget what happened in the past. It'll help you out because A, the past price doesn't matter, which automatically, as I've told you, past price doesn't matter. Just by that philosophy alone, it tells you that technical analysis by design is a failure because it relies on the past price to make decisions in the future. I prove that I get 80% win rate, never paying attention to anything before 9:29, 59, 9999999 and earlier does not matter at all. And I win 80% of my trades. Why? Because that one thought process is so powerful. I can't promise it's going to be your trading, but I didn't feel anything when I woke up. The market was what it was. The structure is what it is. It's bullish from here. You may say, oh, it popped really high on CPI. Maybe I should fade it. Every single indicator is up. All of these lights are green. This is bull long up, all three things are up. Greater market, all three things are up. Resilience, positive. Everything's positive, right? And it's like, if I just started trading today, I wouldn't be scared of anything because I didn't know anything about the past. So we want you to wake up and look at 9:30 in the morning the same way, like every day is your first day trading, right? That's what we teach in our classes. Long was easy trade. CPI impulse came close to all highs of liquidity, but it feels too heavy anyways. We keep grinding, but you prefer shorts at these highs. And this is the thing, like it feels a certain way. And as I know you're saying that in chat, why does it feel that way? This is where Wall Street is designed to trick you. If you have a feeling, you're being tricked. Wall Street's like a casino. The algorithms that are trading this thing are like a very, 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 very smart casino. Hey, YouTube or Zoom, get over on YouTube. We'll continue to talk over there. Casinos get you to keep gambling because it feels. The market has no more feelings. Yeah, there you go. Okay, so here's the thing, right? I always try to teach this to people, is that if you feel a certain way, there's no basis for that. There's no basis for a feeling. Hold on One second. There's absolutely no basis for feeling other than you have witnessed in the past the market do stuff like this before. And in the past, maybe you got in on the trade and it went this way. And so you've conditioned yourself to be afraid of doing that just because the one time you traded, it did that. But imagine, and this is one of my strongest lessons I teach. Your very first trade that you ever make designs you for the next 5 years of your trading. This is the most dangerous, powerful thing that happens to people. The very first trade you make builds your mentality for like the next 5 years of your life. If the first time you trade the market, you longed at a high and it does this, you have immediately wired your brain to trust this, and you will always be trusting this. And it will take you 5 years to unwire that wire that you created with the very first trade you took, the euphoria you felt with all that money you made. You have immediately solidified your brain chemistry around a certain thing that happens, okay? And you're stuck with that for a while. And you'll probably feel euphoric every time the market moves. You're going to want to chase it. Even if it burns you 100 times, you're still going to have that thing. And over time, you're going to start to doubt that. And it takes a long time to unwind this random event that happened. On the other side of the coin, if the market did this and you chased along and then you blew up and lost all your money in your first trade, never again will you trust a green candle. All right. For 5 years of your life, every green candle that pops, you will have doubts. And it will take 5 years for that initial fear to leave your body. Because you didn't know anything about trading. You kind of went from like, imagine that like you were a kid, you know how to swim. And the first time you ever fell into a pool, you almost drowned, right? Because you never knew how to swim and somebody just pushed you into a pool and you almost drowned. For like the rest of your life, you'll be afraid of water. You understand that? It's that sudden thrust into a new environment that immediately shapes you psychologically. It's a whole thing. If the first time you drink tequila, like a lot of us had, and you're fucking throwing your guts up in a bathroom, you'll probably gag every time you smell tequila, right? Your brain is a very powerful thing. If your first trade is euphoria beyond belief, like, oh my God, I made $1,000 in 10 minutes of work. That was so easy. I could quit my job. My asshole of a boss, I could tell him to go fuck himself. I don't have to work for that guy anymore. I see my future. I see my kids. I see my family. I see me paying all my bills. I can do this. Oh my God. Everything that you just said there is wiring millions of neurons differently. You are literally you just rewired your whole future. The psychology that came with that immediate win in your first trade, it's like jumping into a pool, but this time it's jumping in a pool full of money. You automatically have wired your brain a certain way. You are now going to think a certain way for like the next 5 years of your life. People are saying there's some heavy stuff, powerful stuff. It is. It's so true. My first trade was a winner. My first 5 trades are winners. My first, it was like luck because I was buying after the market crashed and everything was going up. It's kind of hard to pick a loser. That certainly framed my thought process for a while. And so if you feel a certain way about the market, a lot of times it's trauma. I know this is some heavy shit, but it's true. You guys get it? That very first trade. So your trading career has caused you a lot of trauma. So in general, right? Like if you feel a certain way about the market, a lot of times it's just because of trust and fear and greed. There really is no science to how the market moves. The stock market is 100% random. A lot of times people's fear is built upon not trusting things because they happened in the past. You longed at a high, it burned you out. But here's the thing though, right? If you were to go back and count all the CPIs that rallied right out the door and what happens at the open, I bet you half of them sold off and maybe half of them rallied. It's probably half. So half of you, probably your last trade got burned, and your next trade you're like, I got burned last time. A lot of you do that. Oh, I got burned last time. I don't think I'm a long CPI anymore. There is no correlation. And this is what you'll learn. At least trading with our style, there is no correlation. So the idea about feeling, and like our whole 20 days course, I promise you guys, I want y'all to take the courses. It's like that. It's designed to have you just be a robot, to not have these feelings. It's designed, it doesn't tell you look at the past. Like I will tell you, I will promise you something. There's a reason at least for us getting as big as we have been getting. I want you guys to come here. Again, go read all the reviews. There's a reason it's all 5 stars. There is some really heavy stuff that you guys work through as traders, but I'm going to tell you, our classes do the following, and this is very important. We don't teach chart patterns, so we do none of this in our classes. And we have the most substantial. Our trading course is better than any 10 put together. And I'm going to stand by that. If you find a trading course better than ours, honestly, I'll give you your course for free. You find something out there that's that much better, you pay $20. I'll give you your $20 back. But look, we don't teach charting patterns. We don't teach time frames, multi-time frame confluence. Those words just sound like a scam. Like these traders that push TA, make sure you have your 1 minute, your 5 minute, your 10 minute, your 1 hour, your 30-minute chart. Have them all, your daily chart, hour chart. If the 1 minute has confluence from the 5 and 5 has confluence from the 30 and 30 has confluence from the hour, it's ridiculous. You set these candles. That's arbitrary. We don't teach multi-time frame. I never change my chart. Time doesn't matter. We don't use times anymore. Candles don't matter. Number 3, we don't teach candles. Wicks, bodies. What? Candles? Like, when you pick up your first Wall Street book and you see all these things, you're like, oh, charts and technical analysis and time frames and candles, this is great. But then when you really back away from it and you think about it, wait, random times I can set, candles somehow predict. It sounds ridiculous. Like when you actually like step back and you're like, how is a candle going to predict the market? What is a candle? You light a wick and burn a candle. It smells nice. The things that Wall Street gurus of the past have been selling you guys is literally nonsense. Has been, always will be. We don't teach you historic data. Nothing before open matters at all. At all. The exception to that is if you tap your DD bands overnight. then you have a caution to the market. But it's not like the price action matters. And number 5, we don't teach price action. Even price action doesn't matter. None of this stuff matters. We don't teach any of that. That stuff's all garbage. None of it. Wait, paper gain? What'd you say? Don't move my stop loss away from your entry and don't add losers. Name of the game if you have any edge. There you go. Wait, hold on. Don't move your stop loss away from entry and don't add to losers. What do you mean by that? Don't add. So adding to losers, there's a principle as to what's defined as a loser. A loser for us is when market structure breaks. Example today, if S&P were to lose this, then it's a loser. But if I long here and I long again, because these are both actually winning setups, then adding to a red trade is not adding to a loser. It's doubling down on a second hand that's a winner. So like here, like you see here, they both go up. So it's kind of like adding to loser is, I hate when people say that, because how do you define a loser? And that's why I can tell people. Yeah, don't throw money at a bad trade. You're 100% right. Yeah, so like if structure's broken, then it's considered a loser. A loser is not defined by like, is your position red or green? And that's where a lot of people, and I know Paper's, I like Paper. Paper's good. He's good. And so like the idea is that a loser is like when structure's broken. It's not when you're red. And so I make my living off of dollar cost averaging. I add to trades all the time that are red. Always, like more than most of my trades. But it's not because I'm adding to them when they're losing. I'm adding to them when there's another winner nearby. So those of you that are listening, he's 100% right. Don't add to a loser. But it's not your position that's red that makes it a loser. It's the market's lost when the 80% structure is broken. That's what I consider a loser. So the market spot, yeah. So anyway, so what I don't teach is like charting, multi-time frame analysis, candles, historic data, price action. None of that. I don't teach any of that. Because that stuff, number one, is so widely available. Number two, it's just a ridiculous concept that the price can predict its own future. Whereas most very substantial traders and hedge fund managers will tell you that the stock market and price movements 100% random. Like the fluctuation. To me, we built our system off the fact that the market's random. So the interesting thing is that technical analysis tries to assume that previous price action implies a future structure. And it doesn't. Case in point, had I longed yesterday here, I contributed to yesterday's MACDs and moving averages and VWAPs yesterday. But does that mean I'm contributing here? How about here? How about here? How does my contribution here mean anything right here? I'm a random guy doing a random thing here. Just because I bought here and I changed the dynamic a little bit, it doesn't mean I'm buying again here. It doesn't mean anyone else is buying again there. What I did in the past affects nobody. As a matter of fact, when people wake up, they have their own motivation, whatever it may be, despite what I did. That one principle alone has me not teach any kind of technical analysis at all. Price action, which means price base indicators, or like trying to add structure to random. And, you know, famous mathematician John Nash, who, you know, came with the Nash equilibrium theory. There was a movie about him with Russell Crowe. Beautiful mind. Went crazy trying to add structure to random. He was trying to find algorithms for everyday competitive behavior. Now, he ultimately came up with one of the greatest thought experiments in modern game theory, which is called the Nash equilibrium. But before that, he became schizophrenic and lost in his own mind and chewing on data, trying to add structure to random. Drove him crazy. The movie kind of like romanticizes his diamond of madness a little bit by having him stand in a courtyard watching pigeons like peck at breadcrumbs, and he's trying to derive an algorithm like staring at that. It's to kind of show how you can go mad and go crazy trying to add structure to random. Like he's going to derive an algorithm for the competitive behavior of what's the probability this pigeon grabbed this piece of food kind of thing, right? So like so the idea is that while previous now, what we do teach about the past, you guys are getting ahead of myself. Price action doesn't matter, but certain things from the past do matter. Okay? So what matters in the past is what matters in the past? Okay, number one, previous day close in equities. That's the only price that matters in all equities. That's it. Just one single data point. Number two, previous day's close in futures. At the futures close. Also matters. Number three, in the overnight, there's a caution if D-band, which is a future structure, you only ask broke or not broke in the morning. Close prices are very big on the liquidity equations. They're very good for settlement prices are built off of that. There's a lot of things that go with it. Somebody was talking about how margin requirements for clearing members are based on previous day's close and collects at the beginning of the day. So when the CME group sets the performance bond minimums for clearing firms, which is essentially the margin requirement to hold the contract, it's certainly based on past data. And that's important to them. And then what's important to you is basically where the market opens off of that information. And the DD band right here is our exploit that takes into account margin requirements. So what you're stating is 100% true, as the things that do matter from the past are just 3 data points. Band and futures, and the previous day's close in both equities and futures. The previous day close is part of the redistribution zone in equities, right? The imbalance, rebalance. And then the previous day's close in futures is the anchor point for the risk interval to set the DD band. What's up, Danny? So other than that, we don't teach that any of the price action apart from these couple of data points are even important. As a matter of fact, our liquidity map right here, this one, can I tell you something pretty neat? For SPY or for GameStop, for Amazon, for anything, this liquidity map that shows me the flow right here, price of SPY itself is not even part of the equation. Liquidity maps are 100% derived from options. So the price of SPY, our best tool doesn't even use price itself. Isn't that crazy? So liquidity map doesn't even care what SPY's open price is. It doesn't care any of that. The calculation doesn't include it. So we don't even include price. We can derive so much information from the option structure. So anyways, the point I'm saying is that technical analysis is not bad. It's just a scam. And is it predictable in the market? Absolutely not. Is it good for letting you take random data and giving it some kind of structure so it's easier for your eyeballs to see what's going on? All right, then that's what it is. But you understand that it's giving you the same thing price is giving you, which is random or structured random. You're just basically looking at random noise in a much more organized fashion. But it doesn't help you see the market faster because all the data that goes into an indicator is from the past. The past can apply to the future. I want you to go down and take a bet. I want you to figure out the last time you and your spouse had a big fight and think about how long that fight lasted. And I want you to make a bet. Is the next fight going to last that long or shorter or longer? And you will get that bet wrong every time because that is also random. So, yeah. Can't predict price at all. Price can't predict itself. Mass is always like, it's always going to be longer. So like random's going to be like random, right? So the idea is that if you add structure to random, all it does is it takes random and add a delay to it. The market moves up here and starts slowing down here. You know, your moving averages are like crossing over maybe here. And okay, it's just showing me something, but it's based on price. So it's not going to be better than price. There's no way you can take a bunch of price data and aggregate it some way to somehow see something about itself that it doesn't already see in its own purest form. Like price moving along, there's no way that you can take like all of this data here, throw it into an equation, and pop out some kind of magical structure to this that this is like listening to. Because number one, this is the delayed version of that. So it's not going to be like, oh, you know what? I probably should move higher because I looked at the delayed version of myself and it was going higher. Therefore, I should continue to go higher. If that was the case, then the market would go straight up forever and ever and ever because that iterative process reinforces itself. If technical analysis can predict its own self, then by definition of something predicting its own self, the very first move of the very first trade of the very first minute the market ever was open since the beginning of time would have split two crossing moving averages apart from each other. And therefore, price would say, aha, that implies it's still bullish. I'm going to keep going up and they're going to keep spreading out. And price will look again and say, aha, that's bullish. I must keep going up. And it would go up, they would diverge, and it would go up and they diverge, and it would infinitely go up to infinity. And these things would infinitely spread out. If there was some kind of self-reinforcing loop back to the math, wouldn't you think the market would just fly straight up without turning around, ever? But sometimes it just defies what's in the indicators, and it sells off, despite what the indicators say. And we were trained earlier in the day to be like, oh, well, you know, sometimes it doesn't work. Well, actually, all the time it doesn't work. It actually never works. It's just a coin flip. It's just random. Sometimes it works, sometimes it doesn't. And I see stuff like, no disrespect at all, but this guy's an absolute fucking tool because he sells garbage books and says stuff like, maximize your trading gains with Anchored VWAP. No offense, Brian Shannon, you're a tool because you tell people this shit right here and then you sell them random noise that looks pretty on a chart, but yet you're telling them they can maximize their trading gains. You know, like, fuck you for saying that. That's stupid. Don't promise people so they buy your book. What? Say what it is. Organize market data better. Have better analysis tools. Maximize your trading gains? Fuck you. Selling ideas to people that don't work. I'm a mathematician. I'm 1,000 times smarter than you. You sell absolute garbage to strangers and tell them to maximize their trading gains? Make money? Oh, my friend. You made a career off of that. Fuck you. Like, you know what I'm saying? Say what it is. Organize market data to better structure for you can plan better. Say what it is instead of selling people nonsense like with the title that says maximize your gains. What? I saw that yesterday. Somebody was posting that. What? Like, how many people were like, I can maximize my trading gains? Okay. So, just sucks that that's what we, like, as traders kind of got thrown into. No offense. I mean, you made a career, but people make career out of selling books. I'm not a fan of people that sell an idea that a chart can maximize your trading gains. It's like saying make money now, make more money, promising, and that gets in your head where you're like, I can make money. It's not what it is. It's you're lying to people because that's not what you're doing. You're telling people how to organize data better and how to read market data slightly better. So maybe your tagline should be structure market data better, learn how to read charts better, learn how to do whatever, but like make more money as a tagline to a book. It makes me kind of hate you. Like literally makes me hate you a whole lot, actually, for selling hope to people. But you know what I'm saying? Like people like that, I would trade circles around if that's their thought process. I don't even think they really trade, but I just have like a big fuck you to people that do that because that's not what you're doing. You're giving people the idea that something like that can make them more money. And the way you make money in trading is by not losing money and having risk management and having position management, having those kind of skills. It's not trying to add some kind of structure to the randomness of the market that will somehow magically make you money. It sounds like magic beans. And I really hate that there's a lot of people that do that. And they sell a lot of trading books. And I'm like a big proponent to like not telling you to read trading books. You know what I'm saying? That stuff doesn't, I mean, take it from me, my expertise as a mathematician, I can see that. I can see the math. I know a lot of you guys probably can as well. It sounds silly to an educated person to say that a chart can make you money. And any kind of analysis of charting data can somehow make you money. It completely takes away the actual skill set of a trader, which is where I shine. Risk management, position management, control positions, stop management, entry management, things like that. That's where you make money as a trader. Don't diminish what I do by calling that shit trading. I mean, that's just silly. These YouTubes don't make money from trading, but they're subs. Yeah, well, yeah, I mean, a lot of people do. You're with me, Matt? I know a lot of marketers that can claim you need a big title to get attention, regardless if you can deliver. Yeah, like, that's it. I've never really read any of Al Brooks' stuff, to be honest. I love people who come out and say that the stock market's random. And like, they're like, well, we have a way to work inside of it. So like, how do we behave in the random market? You know, because we don't use any of that stuff. What we actually do is we look at options, and options tell you where people want to buy and sell at a point in time. That's actually like taking everybody to a poker table and saying, show me your cards. Okay, you're longing SPY 600 calls next Friday. SPY 620 calls next Tuesday. SPY 580 puts for tomorrow. Okay. Where's the risk of all of this? Oh, was there a market maker trading against you? Okay. What about you? What about you? Okay. This is how Wall Street is structured. It's not random to that. That's actually where positions are. And if there's a tried and true behavior of the market, if more people are buying than selling, markets are going to go up. If more people are selling than buying, market's going to go down. This is just the basic supply and demand. And we built our stuff on top of that. Where is the supply and where's the demand? Well, you can find the demand in the options. The options, people tell you where they want to buy and sell. The demand of both sides of the market. I want to enter a short, so there's a demand for shorting. I want to enter a long, there's a demand for longing. And monthly maps structure out the market for where people want to buy and sell. It's not hocus pocus. It's not past price action data trying to infer the future. It literally is just price data. Options data. And it's showing you that people want to be long the market at a lower price. That means if a market falls to here, that might be bearish for like 2 or 3 weeks. And then 4 weeks later, it's bullish again, which means the appetite for this dip is very strong within the next month. That's what it tells me. It doesn't tell me that it has to do that, but it tells me right now Wall Street is completely armed and ready to continue buying the S&P. As a matter of fact, if bears are liquidating their positions lower or puts are lower and further out of the money as time goes by, if price stays exactly here, your puts are further out of the money, or your put distribution is. So bears are even further and further and further away from the current price, which means between now and then, more shorts are going to be squeezing and price is likely to go up. Just on that pressure alone, more buyers and sellers. And so we make an inference of where buyers and sellers will be based on current options data to show me the landscape in the future. So TA, the big fuck you to TA sales losers is take the past price and guess the future. I'm looking in the future to see the future. I'm not guessing anything. This is what is. There's no guess here. Just the actual positions that are here. We're not inferring anything. This is where that balance is. This is exactly what is. And does the market have to listen to it? Absolutely not. But I know that as statistically, the bull market stays bullish most all of the time. So I just want to make sure that the structure agrees with me. And yes, over time, it's bullish. So I've got a good bullish mindset. So every day, I'm going to look at structured trades to see in the future, my fellow bulls are with me. So I'm going to be bullish every day. And that's like as good as you can do. You're still making a bet on the randomness of the market. And I hate to say it and burst a lot of people's bubbles, but when you're using technical analysis, it's not doing anything for you extra. It's like basically taking like 5 different pieces of paper and organizing it into like one note sheet. It just simplifies reading the chart, but at the basis, reading the chart is pointless on its own face. So, you know, I hate when people title their books "Make More Money Using This Chart Reading Thing." I think anybody that tells a trader make more money, right, is a jackass. 100%. I hate that sales pitch. This is the TikTok guru with the Lambo, but from the 80s. That guy looks like he's like older than me. So, you know, when they sell these books 80s and 90s and 2000s for the age of social media, they would have been TikTok Lambo drivers selling the same nonsense today. But anyways, no offense to these people personally, but they're just snake oil. And on its own, I bet you the book, and again, no disrespect, I bet you the book's really good at what it is, but it's marketed in a way that makes me want to vomit. Technical analysis is a self-fulfilling thing too, as Neil has said. I would love anybody that wrote any kind of TA and explained to you what it is. This is a mathematical principle that analyzes the data and organizes it for you better. It makes it easier to read the chart. And then that doesn't sell as many books, but it's more truthful to tell you what you're actually doing. Yeah, so example is I talked about the other day. Said there's an easy way to prove how technical analysis can work to a degree based on the crowd herd theory. And I said, you know, everybody know Zach Morris, Eddie, the trader, has that power of just telling people that he likes a stock and everybody comes and buys it just because he said, I like the stock. And then the stock goes up. That's technically technical analysis because everyone's doing something somewhere. The indicator is like, I like the stock. That's your indicator. I like the stock. And it goes up. So then the indicator works, but it's not because I like the stock works, because I can say I like the stock and it doesn't go up. But he says I like the stock and it goes up. What makes it work is the influence that it has and the repeatability of that thing. If more people are doing that thing at that place at that time, then the market becomes imbalanced and then it goes. TA had its heyday, I always say like a million years ago. People taught like retracements and stuff, and the market would pull back and somebody wrote a book and says, aha, at the bottom of this Bollinger Band, you can long it back to the middle. And that's typically a strategy. And then if there's not a lot of traders really trading like we all trade now, the few people that are studying the popular indicator of the moment. Like these things would go through, you know, waves of popularity, like a trend. Like this is the trend. Everybody's using Bollinger Bands this year. Okay. Well, they're working. As long as everybody's buying here, then they're going to look like they work. So like the idea is that they're self-fulfilling, and TA has the power of being self-fulfilling if you can guarantee the Zach Morris theory is true, that everyone's using the same indicator. However, as time has gone by, the analysis types have diverged, and there's so many different types now. There's not just popular charts and indicators. There's a million indicators. And there's options flow, order flow, tape reading. There's millions of kinds of analysis now that all your traders are spread out through multiple things. So nothing is really strong anymore on the self-fulfilling nature of what made it strong before. Everything's become weaker as time goes by because there's more things to do. Zach the Goat. Yeah, I always give praises to him because he figured out an exploit in the market. I mean, you can't argue with everyone trying to figure out a way to make money. And, you know, Zach is a technical indicator. Kramer is probably a technical indicator. You inverse what he says. But the idea is that the idea is that when everyone's doing something at the same time, the same price, the same moment, it creates an imbalance. And the imbalance is what makes it moves. If you can influence that many people that fast, you can. And TA used to influence that many people that fast because there wasn't such an abundance of information like in the YouTube days. Right now, everyone can show what they use in their trading. And all you guys are going to be so vastly different. But like 30 years ago, everybody would have a couple moving averages and maybe a VWAP. And, you know, the same, maybe a fib or two, you know, the same type of indicators. And when everybody's using the same thing, it's self-fulfilling it a little better than now. But now it's like the uselessness of technicals has become very, very obvious because fewer people are using them. We need to set up a dinner with me and Eddie. Fox here and Atlas podcast. Yeah, a lot of them live in Houston. DJ I think lives in Houston still. I've never hung out with those guys before, though. But it's a case study in like how markets move based on that. So the idea is that can you find a place where everybody is going to be acting at the same place in the same time? And I took that philosophy and built it into here. Well, yeah, hedge pressure. Because at this point, dealers of SPY options have negative gamma and positive gamma influence at this exact level. It's maximized. So the probability is very high that above here, there's just more longing than shorting. In general, to balance positions. Down here, there's more shorting than longing. So if the market is falling to here, the closer you get to it, the stronger the wind is blowing against it. So as you get closer to here, the volume's going to spike up. That's kind of like Zach Morris principle. Everybody's doing something at the same place. The probability is higher that it goes up. And that's why we look at this in the options place. So the options place provides structure. Even though the market's random, the structure is 100% accurate that there's more long than shorts. It doesn't mean that price goes up, but it means the probability is higher than it does. So the idea is that's kind of what you're looking for. That's the idea. For stocks, how do you decide if half gap holds? Thank you. You don't have any way to decide that, Lucas. In stocks, you don't have a resilience, unfortunately. So stocks half gap is just taken on its own face. A stock is the purest form of random. With the index, because the index is a composite of a bunch of stocks, you can, and the index is tracking the stocks, you can look at the stock's behavior to infer the index because it's trying to track it. But a stock in its own definition is 100% random. The only thing that you can use, because a stock is going to move up or down just purely on the supply and demand. A stock is not tracking anything. Does that make sense, Lucas? A stock is something either people want to buy or don't want to buy, and it's random to figure that out. The index is observing all of it together and can watch if all the stocks are going up or down. So the index can be inferred by the stocks, yes. Not the other way around. The stock is 100% random. Stock market went up today. Why? Well, because the majority of the market cap is being bought more than it's being sold. Are all the index sectors up? Probably not. Yeah, some of them are down. But overall, the index is going up because the majority of the up outweighs the majority of the down. Easy to see that today. It's slightly more bullish than bearish. Okay. Percent basis. So each individual stock has nothing that it's tracking. The only thing you can do for a stock is at its purest form, look at its own structure and options, which the options, again, are future looking. So NVIDIA has its own future looking structure, but it doesn't even imply that NVIDIA has to follow it. But it's the best you can do. NVIDIA opens above MHP, and we say that MHP tries to hold 90% of the time. You'll stay on the same side. And while it is selling off it can continue to sell if that pressure is still there, but you can see that the structure is overwhelming it. So basically with stocks, you just bet on its own structure of options, basically. Jay Smith, do I have set hours in the day for trading? I usually trade between market open and about now. I usually close out right about 11. Like an hour and a half a day. So the easy thing with the trading an index is that an index can use like an aggregate of like, what are all the stocks doing? What are all the stocks doing? What are all the stocks doing to help me understand what the index should be doing? And that makes it easy, right? But a stock is like, well, it's random, right? You have structure in the stock, but that's about as good as you can do. Certainly, technical analysis in stocks is even worse than technical analysis anywhere else. Because the stock is going to randomly move, despite what anything's doing. So with the stock, you're looking for there to be no news, no catalyst, no reason for the stock to move. You're going to want the index to be kind of stable so that people aren't getting margin calls. You're going to want the sector to be stable so people aren't getting margin calls. If people are getting margin calls, they're going to liquidate stuff, and then they randomly pick stocks and sell them. As long as the index is structured good, and the sector is structured good, then the probability that people out there are being squeezed out of their positions and they're forced to dump stuff is very low. So as long as the index and the sector looks good, like it's not collapsing, then the structure of the stock holds up pretty well. So liquidity map in its purest form is pretty strong. So for instance, NVIDIA today, there's pressure from orange to blue. Now I don't take it all the way there because bear zone top is a limit. So here to bear zone top would be like the maximum trade I'd be looking for. If I were bearish this thing, I would look for confirmation that we broke MHP, and then I would short it to the next support, which is bear zone. So all day long, right, you see it's trying to push this way and trying to push this way. It's flip-flopping between the structure points. So when I'm trading stocks, which I rarely do anymore because index products are so easier because you got all these extra tools you can use on an index. A stock on its purest form, you got to choose. Am I a bull or a bear here? But at least I know I'm only a bull or a bear from here. I'm not trading it anywhere else, right? Cedric, we don't have any data on the data is universal for all cases. So we don't have any specific data that further zooms in on what you're asking. So we just look at every single day, open above or below. Yeah, good question. So the MHP stats are where we open versus where we close. All right, we're gonna do a Zoom call today, so make sure you guys get in on that. Killer day today. It's all the trades I did. That was good. Discord is fire. Thanks, man. Appreciate it. Oh, yeah, dude. As Vlad has said, is a reason why data mining with TA doesn't work. That's exactly why, it doesn't work. Yeah, that was me today. Now, again, I had like a 20K loss yesterday, though. So I've had some pretty sizable days. I think last week I had a bunch of 10 and 20K days back to back to back to back. But yesterday I took an equally sized loss. So I just basically like back to where I started. Oh yeah, Danny, cool, man. Yeah, just have fun with it. The 20 days courses are kind of like where the main focus is. But yeah, there's everything in that Discord is something that we made. By the way, we basically created all of that stuff. Or like a team of math dudes here, dudes and dudettes. All right, guys. I'm gonna call it. I love y'all. I got a few more things I need to do. S&P walking up to 60.92. DD band, one of our best XC target techniques we teach. Beyond DD band, I don't do any entries or exits. I usually close out my trade and call it a day. So looks like S&P walked right up to it to finish off the day, which is good. That's great. Don't forget, we brought back our 20 days class for $20. You get the daily Zoom calls. You must go. So head over to Rocket Place. Go here. We got our courses back. They're going to be $20 for the 20 days classes. It's a subscription. You can come every single month. We go through class 1 through 20, then we start back over. We're kind of like class number 9, I think, right now. You can catch right up. We go over one technique a day. We don't do any charting, old school stuff that you guys learn. It's all revolutionary new techniques. It's all future looking. Most of our techniques use options to find pivots, predict volume. We look at margin requirements and futures to predict high volume pivots as well. We look at structured things, open and close, MOO, MOC process. We look at actual structure points on the Globex and on the exchange itself. And then we create trade ideas out of those. The things that are consistent, not random price action, but the things that are there every day. We make trade tools based on consistent things. That's kind of the goal as we talk about today. Technical analysis has on its own merits nothing but randomness. How can you prove that everybody's going to buy somewhere? Well, it may be popular for 1 year and maybe not popular for enough. The indicator relies on the popularity of itself to be strong, but the structure is either regulatory or required by the exchange or just unable to be inconsistent. Everyone delta hedges no matter what. That's consistent. Everyone does the same thing all the time, always. Then that's consistent. That's what we exploit, are actual consistent things now that don't have trending popularity. You'd have to create a whole new way to price options, and Black-Scholes would have to become obsolete for our stuff to fail at what it does, which is reading the actual structure of the market. Hey, that happens. We'll exploit the new equation. I love you guys, so we'll see you later. Great day today.